Welcome to the Deep Dive, where we cut through the noise to get to the core of complex topics. Today, we're diving into something that affects, well, almost every single one of us, tax law. Specifically, we're going to try and unravel the three primary sources of tax authority that govern how taxes work here in the U.S. Our mission is really to understand substantial tax authority, not just, what it is, but what gives tax rules their actual power, and critically, how you can navigate them. When we talk about substantial tax authority, we're basically asking about the strengths, the reliability of a tax rule source. How much weight does it carry? Can you confidently rely on it if the IRS comes knocking? It's about knowing which rules really matter. Before we dive deeper, though, just a quick reminder that this deep dive is based on material from Farhat Lectures. All the content, examples, and explanations we'll discuss are derived from the comprehensive accounting resources at farhatlectures.com. So whether you're an accounting student, a CPA candidate, or already a professional, do visit the website for additional practice questions, video lectures, and detailed support to reinforce today's topic. And special thanks to Professor Farhat for providing this valuable material.
Yeah, and it's so crucial to understand these sources because they don't just, exist separately. Knowing how these different layers of authority actually interact, well, that's absolutely essential for any taxpayer or professional. It helps you truly understand your obligations, your rights, and frankly, how to effectively challenge something if you think there's been an error. It's about being informed, not just compliant.
That's a really good point. So when most people think about where tax rules come from, I guess the first thing is Congress passing laws. Is that basically the foundational, the original source?
Absolutely. The very first place we look is the legislative branch. So laws enacted by the U.S. Congress. This is where the Internal Revenue Code, the IRC, comes from. That's the cornerstone of federal tax law. It sets the broad rules for, well, everything, how U.S. income is taxed, how we try to prevent double taxation on foreign income through international agreements. It is the primary source. Full stop.
Right. And we've certainly seen massive shifts from Congress, like the Tax Cuts and Jobs Act. That was a huge piece of legislation, changed the whole landscape for individuals and businesses. It wasn't just minor tweaks, was it? Shows Congress's real power here.
Precisely. Those legislative acts are the bedrock. Now, something really key here is this idea of congressional intent. Sometimes, even really well-drafted laws can be a bit ambiguous in certain situations. When that happens, Congress often issues detailed reports to clarify what they originally meant. And for you, the taxpayer or the professional, this is gold. It's not just reading the words, it's understanding the lawmaker's original thinking. Super helpful for applying the law correctly, especially in tricky areas.
Okay, so those reports aren't just like background info. They're actually part of understanding how to apply the law. Interesting. But if Congress is at the top, is there anything even higher? Does the Constitution ever come into play with tax law?
That's a great question. And yes, it brings us to the ultimate authority. If you look at the big picture, the U.S. Constitution stands above everything, even Congress's laws. Now, it's pretty rare for a tax law to be found unconstitutional, but if that conflict ever did arise, the Constitution would absolutely prevail. It's the bedrock, making sure all laws, tax laws included, stick to the fundamental principles of the country. It's the final check on legislative power.
Okay, so Congress lays down the big rules, but anyone who's tried reading the tax code knows those big rules need a lot of details, practical instructions, real-world examples fleshed out, and that's where the administrative branch, like the Treasury and the IRS, comes in. They translate the laws into something usable. This feels like where the rubber really meets the road for taxpayers.
It's exactly right. This administrative layer is where the Department of the Treasury, and by extension the IRS, creates the rules, regulations, and procedural statements needed to implement and enforce the laws Congress passes. And it's really important to remember the IRS is part of the Treasury. They have to follow these Treasury regulations. Understanding these administrative documents is just paramount because they're basically the IRS's operating manual for how they interpret and apply the law to you.
Right. And within this administrative world, there are a few key documents we should probably touch on. Let's start with Treasury Regulations. What makes them so important?
Okay, Treasury regulations are the highest administrative authority. They're issued by the Treasury Department specifically to interpret the tax law passed by Congress. They aren't just suggestions. They are the rules the IRS must follow, period. So for you, this means if you're arguing about a deduction or some tax treatment, finding a specific regulation that backs you up, that's like having the official rule book on your side. They provide the nitty-gritty details that clarify the IRC.
Okay, so they carry serious weight. Got it. Next up, revenue rulings. How do they stack up authority-wise?
Revenue rulings are a bit different. They're interpretations issued by the IRS itself, explaining how the tax law applies to specific fact patterns. They are considered primary authority, definitely important, but they don't have quite the same binding force on the courts as Treasury regulations do. Think of them as the IRS saying, okay, lots of people ask about this situation. Here's our official take on how the law works here. Helpful for guidance, especially on common questions, but not as rock solid as a regulation.
And then there are revenue procedures. Are these more about the how-to stuff?
Exactly. Revenue procedures focus on the internal management practices and the procedural sort of how-to guides for the IRS and taxpayers. For instance, they might lay out the exact steps you need to follow to request a certain ruling or make a specific tax election. Their authority level is generally lower than revenue rulings because they're more about the mechanics of dealing with the IRS, not so much interpreting the substance of the tax law itself.
Okay. What about private letter rulings, PLRs? The name makes them sound very specific.
Yeah, and they are very specific. A private letter ruling, or PLR, is a direct response from the IRS National Office to one specific taxpayer about a transaction they're planning to do. The key is proposed. It hasn't happened yet. Now, they are private, as the name says, and technically only binding on that taxpayer who requested it, but they offer fantastic insight into the IRS's current thinking on an issue. Say you're dealing with something new or complex, maybe certain crypto transactions. Getting a PLR gives you clarity straight from the horse's mouth on how they would treat your specific situation. While it's not precedent for anyone else, other taxpayers and advisors definitely look at them for guidance in similar situations.
That makes total sense, especially for new stuff. Are technical advice memoranda, TAMs, similar then?
Similar structure, but a crucial difference. TAMs deal with completed transactions. These are issued by the IRS National Office, usually to IRS field agents or appeals officers during an audit when a really complex or technical issue comes up. Like PLRs, they aren't binding precedent for other taxpayers, but they again provide a valuable window into how the IRS analyzes a particular issue after the fact in a real-world audit scenario. Very useful for understanding their approach.
Right. And finally, we have IRS publications like Publication 17, the big income tax guide. Everyone sees these. They're super common. But what's their actual legal authority?
Yes. This is a really important one to get right. While IRS publications are incredibly helpful, often the first stop for many taxpayers looking for answers, they are not legally binding authority. Let me repeat that. Not legally binding. They're designed as user-friendly guides, summarizing complex tax law, highlighting changes. But you absolutely cannot cite an IRS publication as your legal defense in court or even necessarily in an audit. Think of them as summaries or explanations, not the law itself. So great for understanding, definitely read them, but don't rely on them as your final legal word.
Wow. Okay, so that administrative layer really does fill in all the gaps, from the super authoritative Treasury regs down to the helpful but not binding publications. Essential stuff for anyone trying to actually do their taxes correctly. Okay, so we've got Congress making laws, the Treasury IRS interpreting and implementing them. But, our tax system in the U.S. is mostly self-assessment and self-reporting. Meaning you figure what you owe and you tell the IRS. So what happens when there's a disagreement? Or when the IRS just wants to check your numbers? That must be where audits and eventually the courts come in.
Precisely. The IRS's main tool for enforcement is the audit. And you can get selected for an audit for a few different reasons. Sometimes, honestly, it's just random selection, pure luck of the draw, or bad luck, depending on how you see it. Other times, the IRS uses pretty sophisticated statistical analysis software. The best-known one is the Discriminant Inventory Function System, or DIF score. It flags returns that look statistically unusual compared to similar returns. Maybe your reported business expenses seem way out of line for your income level in that industry. That could raise a flag.
Yeah, I can see how those statistical programs would work. And then there are specific triggers too, right? Like mismatches between what you report and what third parties report, like your employer with a W-2 or a bank with a 1099. I remember reading that example from the source material about the taxpayer after the 2008 crash. They correctly reported their capital loss deduction, the $3,000 limit per year. But their broker's 1099 form, which also went straight to the IRS, reported the total sales proceeds from all their stock sales that year, not just the net loss. So the automated system saw this huge number from the broker and the much smaller $3,000 loss reported by the taxpayer, and boom, triggered an audit. Even though the taxpayer was completely right, it just shows how important it is for those numbers to align or at least be explainable.
That's a perfect illustration. Yeah, those automated systems are powerful for finding discrepancies, which then often need a human to actually look at them and figure out what's going on. Now, if you are selected for an audit, it can happen in different ways. There's the mail audit, usually for simple issues, an office audit where you go to an IRS office,
Hmm.
or a field audit where an IRS agent might actually come to your home or business, usually for more complex cases. And if you go through the audit and you just don't agree with the IRS examiner's findings, you don't have to immediately sue them. There's an administrative appeal process within the IRS itself. You can take your case to their appeals division, and actually many disputes get resolved there without ever going to court.
Okay, but if the appeal doesn't work out, then it's potentially off to court. So for our listeners, what are the main courts where you might end up in a tax dispute, and what are the key things to know about choosing between them?
Right, so there are three main trial courts where you can start your case against the IRS. Each one has really distinct features, and knowing these is critical. First, there's the U.S. Tax Court. This court is special because it only hears tax cases. The judges are tax experts. But the biggest advantage, the reason many people choose it, is you do not have to pay the disputed tax before you file your case there. If the IRS says you owe $50,000 and you disagree, you can fight it in tax court without paying that $50K first. That's huge. The judges travel around the country too, so it's pretty accessible. Now, the tax court issues two types of decisions. Regular decisions set new legal precedents. These are the important ones for future cases. Memorandum decisions usually just apply existing law to the specific facts of a case. They don't usually make new law, but are still helpful to see how the court handles similar situations. And they also have a small case procedure for disputes under $50,000. It's much more informal. But the catch is, you can't appeal the decision from the small case division. It's final.
Okay, so the tax court sounds unique, especially that no need to pay first part. What about the other courts?
Right, that's the main differentiator. The next option is the U.S. District Court. This is your local federal trial court. It hears all kinds of federal cases, civil, criminal, everything, not just tax. The key difference here is you must pay the disputed tax first, then you sue the government in district court to get a refund. But a big draw for some taxpayers is that in district court, you can request a jury trial. You can't get a jury in tax court. And the third option is the U.S. Court of Federal Claims. This court is based in Washington, D.C., but hears cases from all over. It specifically handles claims for money against the U.S. government. Just like the district court, you must pay the tax first before you can sue here. And also, like the tax court, there are no jury trials in the Court of Federal Claims. This court often handles large, complex refund suits, maybe from big corporations.
Wow, okay. So if you're thinking about going to court, you really have to weigh these options. Pay first or not, want a jury, prefer specialized tax judges, lots to consider. And if you lose in one of these trial courts, what happens then?
Then you generally have the right to appeal. The next level up is the U.S. Courts of Appeals. These are regional courts, like the Ninth Circuit, the Second Circuit, and so on. They review the decisions made by the tax court, the district courts, and the Court of Federal Claims within their geographic area. And finally, the court of last resort is the U.S. Supreme Court. But honestly, they hear very few tax cases. They usually only take a tax case if there's a disagreement among the different courts of appeals on a point of law, what's called a circuit split. They step in to create a single nationwide rule.
And just quickly, when you're in court as the taxpayer fighting the IRS, who generally has to prove their case, what's the burden of proof?
Generally speaking, the burden of proof is on the taxpayer. You usually have to convince the court that your position is more likely than not correct. That basically means showing there's a greater than 50% chance that your interpretation of the facts or the law is the right one. It really underscores why having good records and understanding the law is so important.
Okay, so we've walked through Congress making the laws, the administrative agencies like Treasury and IRS adding the details and rules, and then the courts sorting out disagreements. With all these different sources, laws, regulations, court cases, IRS rulings, how do you know which one wins if they seem to conflict? It really is like a pyramid of authority, isn't it?
Exactly. There's a definite hierarchy, a pecking order for tax authority. And knowing this hierarchy is absolutely critical for tax research or planning. Higher authority always trumps lower authority if there's a conflict. So at the very, very top, the absolute supreme law of the land is the U.S. Constitution. Nothing can override the Constitution. Right below the Constitution is the Internal Revenue Code, IRC itself. These are the actual tax laws passed by Congress. The statutes. That's the direct voice of the legislature on tax. Next level down, you have the Treasury Regulations. Remember, these are issued by the Treasury Department to interpret the IRC. They're the highest administrative authority and binding on the IRS. They put the meat on the bones of the law. After regulations, we look to court opinions. And here, the hierarchy matters too. U.S. Supreme Court decisions are the ultimate judicial word, binding on everyone. Below the Supreme Court are the U.S. Courts of Appeals decisions, and below them are the trial court decisions from the tax court, district courts, and the Court of Federal Claims. And crucially, a later decision from a higher court always overrides an earlier decision or a decision from a lower court. You always have to check for the most recent, highest authority on your issue. Okay, then we move down to the less authoritative administrative stuff. Revenue rulings from the IRS come next. They provide the IRS's interpretation for specific situations, good guidance, but not as strong as regulations or court decisions. Below those are revenue procedures. These, remember, are more about internal IRS management and how-to steps, less about interpreting the substance of the law. And then right near the bottom, in terms of binding authority, you've got things like private letter rulings, PLRs, technical advice memoranda, TAMs, and IRS publications. As we said, PLRs are only binding on the taxpayer who got it. TAMs and publications aren't binding precedent for others at all, even though they can be really informative and give you clues about IRS thinking.
Okay, that makes sense. So the golden rule seems to be always look for the latest word from the highest possible authority on the ladder. That hierarchy gives you a clear roadmap.
Absolutely. Understanding this hierarchy is what empowers you. Whether you're a student studying for the CPA exam, a professional advising clients, or just trying to manage your own tax situation, it helps you understand the basis for tax decisions. And it raises an important question, really. How does knowing this hierarchy empower you personally in your own financial understanding or maybe your professional practice? It gives you the framework and potentially a defense.
Yeah, it really does. And it makes you think, given that our system is self-reported and the IRS relies so much on statistical checks and that third-party info to spot issues, what does understanding this whole structure of authority really imply about your own responsibility? Your responsibility to accurately document and report everything, even, seemingly small transactions, and making sure your records actually line up with the official sources of truth. Definitely something to mull over. Well, thank you so much for joining us on this deep dive into the sources of tax law. We really hope this exploration helps give you more clarity and maybe a bit more confidence in navigating the whole tax landscape. Until next time, keep digging, keep learning, and stay well informed.